Silver's going to walk like this year. You can look at it and you can say, I would not be surprised to see $40. And then next year you're at $50. I mean, from what happens from there, we need to wait and see what it looks like, right? But the 2011 top of 50, it's definitely going to take that out.
Hey everyone, this is Elijah Johnson with the Miles Franklin Market Update. And with us today is E.B. Tucker from Metallo Royalty and also the author of the new book, Why Gold, Why Now? E.B. Tucker, thank you so much for joining us today.
Thanks for having me.
All right, now I wanted to discuss your book today because it just came out, newly published. Now, one of the things that the book is about is really obviously why to invest in gold right now. The first line that you write is that the first quarter of 2020 marked the end of capitalism as we know it. Can you expand on that?
Yeah, I would love to, because I actually call what we have in the U.S. crypto capitalism, and people think that means cryptocurrency. It has nothing to do with cryptocurrency. So you're taught this is capitalism. That's what that's the dinner table conversation, when you're growing up, is this is a capitalist society and it's better than a socialist society because blah, blah, blah. People give you these reasons, but it's actually not true anymore. So now we live in this system that goes from bubble to crisis to bubble to crisis. The last real recession that we had, because remember, recessions are something that happens in a capitalist system. A recession is as natural as a forest fire. If the forest grows too thick, then there's a lightning strike or something happens and it catches on fire and then it burns and there's green shoots emerge. You actually hear this in economics, in the capitalist society. You used to hear it. Green shoots. Do we see green shoots? That's what they're talking about, is that the recession purges the weak operators. Like, okay, so you have 5 people that are in the coffee business or something. And one of them is fantastic at running his business, but one of them is awful. I mean, he just spends all the money, borrows money, he runs the coffee shop, like a drunken sailor. And then business slows down in a recession. And the guy that's the weakest competitor goes out of business. And then there's only 4 left. There were 5. Okay, this is how recessions work. We don't have that anymore. All we do is we blow this big bubble up, and then we have boom, a crisis like we had in March, where you have like 3 or 4 weeks of just absolute panic. And then it's all over. So some people go out of business, of course, but it's not by natural forces. It's by who gets the PPP and the PPPLP and the TALF and the TARP. I mean, it's all CRAP. That's what it is. It's like, it's not business. It's not what we're taught. So this is no longer a capitalist system. You have to play the game. And if you want to survive, you better understand the game and stop thinking that you're in a real market-based economy, because you're not.
No, you also talk about in your book kind of about this controlling of the economy, right? The controlling of the financial system. But gold is something that is simple, you say. It's something that can't be controlled. It's something that doesn't depend on something else for its value. So why gold? Why now?
So that's the key that we want to show people in the book. See, this is controversial, okay? Especially, you might even disagree with this, but gold is not an investment, okay? It doesn't do anything. The thing about gold, you got to understand, you hold it in your hand and it depends on nothing. So if I buy an apartment complex, I need the tenants to pay rent on time, and I need the bills for repairs to be at a certain level and all these things, or else it has no value. I mean, if the tenants don't pay the rent, it's just a liability. Okay. If I buy a corporate bond, which there used to be corporate bonds that had interest, yields, but they don't have them anymore. So if I bought a 5% corporate bond, I need the corporation to pay me the bond coupon. Right? Like every asset that you think of it depends on something. Like if you buy Apple stock, you need Apple to keep making computers and phones and keep making money doing it and keep innovating and have a 5G phone and a 7G phone. And you need them to carry on this path, or else the stock is not worth anything. I mean, so the corporation has to produce profits. Okay, gold doesn't do anything. So why does that matter? Well, look at Buffett. Buffett's comments about gold are exactly right. I mean, I give the guy a hard time in the book, but I'm like, look, he's not lying. Gold does nothing. You dig it out of the ground, you put it in another hole, you pay a guy with a gun to watch out for it. It doesn't make any sense. But this debt-based system doesn't make any sense. So you're in this spot where if you had a natural capitalist system with market-based interest rates, with natural capitalist forces, you would be a fool to own gold because you wouldn't need it. You would be able to be in a scenario where you're investing based on supply and demand and fundamentals and oversupply and excess capacity, but you don't have that anymore. You don't have that. So last year, at the end of the year, 255 trillion of debt in the world. Okay. And you looked at gold at the time and you were somewhere less than 10 trillion worth of gold in the world. But now all this changed because in March, within a matter of a few weeks, you had trillions and trillions of dollars just in the U.S. that was just thrown out at the economy like out of a fire hose as fast as possible. Now the whole world did this, and now you're going to have to spend more money. Well, what's the debt going to be at the end of this year? I don't know, but let's say it's going to be closer to 300 trillion than to where it started. Okay, I think everyone can agree on that. And the value of gold. Everyone says, oh, it's in a bubble now. You see the chart behind me. I'm watching it most days. Look, I mean, say it's 12, 13 trillion. I mean, what do you want to own? All this debt, okay, is backed by assets that can't produce. It's backed by assets that are struggling. Office buildings. I'm out of my office. I'm looking over at the other offices. It's huge buildings, empty. You can't go in there because somebody might catch a cold and sneeze or something, and then everyone has to go home for a month. You can't do it. So what about the pension fund that bought the office building for $100 million? What happens to those guys? I mean, they were already making only 4%. What are they making now? They're losing money, but good news, they're going to get a bailout from the Fed for commercial-backed mortgage security bailout. Good news. So, I mean, but do you see where this is going? So when you look at the picture, you say to yourself, I want to own something that doesn't depend on any of these shenanigans. For now, I mean, the book is not why own gold forever. The book is why gold, why now? It's not why gold next decade. It's now, and now is the time. It's all about timing. I mean, you look back at the last few years, you didn't really need to own gold 2011 to 2016 or 17. You had this massive melt up in the stock market. I mean, you're better off owning tech stocks. It was this deflationary boom that you had. So it's not always a good decision. It's a good time to look at it now.
And you mentioned in the book about this expansion of the money supply. Around the world, the stimulus that's happened since the COVID situation, you give the number of, $12 trillion around the world. Whatever the number actually is might not matter too much, but really the other number that you point to is about $10 trillion of value that all the gold has around the world. And that took thousands of years to mine out. And then within, 5 months or so, the world just creates that value out of nothing. That kind of just gives a little perspective on how distorted the system is right now.
Yeah, I mean, you have, this is the $20 bill here, which it's redeemable. It says on the front, redeemable in gold coins. I mean, go to the bank and ask them for $1,950 and look at the difference. I mean, $20, that was an ounce of gold. That was an ounce of gold. I mean, we're only talking about 100 years ago. I mean, 90 years ago. It's not that long ago. Now, I mean, the stack of money is like this tall. I mean, I've done this myself. It's shocking how many dollars. It's going to be taller. It's everybody's fixated on their worth, their salary, all these. I mean, they're fixated on this stuff, and the goal of the guys in control is to erode the value, the purchasing power, slowly enough that you don't notice. I mean, we say in the book, if your ancestor, back when that $20 bill was around, if your ancestor had saved up 10 grand to give to you today, 90 years later, and the 10 grand, buys very little today, and then the 10 grand into gold, it's like the numbers are shocking. It preserved what was big wealth back then. I mean, there was a lot of money, and they actually had large bills back then. I mean, $5,000 bill. I mean, forget about it. Now it's 100. I mean, I just was in Aspen, Colorado, having some meetings with a couple of people there I've been trying to catch up with, and the COVID. You can't. Now you can travel a little bit, and $100 is like breakfast. It's like that's you had some juices and this thing's very expensive there, and $100. I mean, and guess what? The servers want 25% because it's COVID. See what I mean? Everything is. You just look at this world, man. How can you think this is business as usual? That's the thing. Everybody's going to catch on at some point. It's not business as usual. Now's the time to get positioned, because for this system, for these guys to maintain control of this system, there's always going to be somebody in power, right? I mean, anywhere in the world, there's always going to be a force in power. You're never going to escape that, nor do you need to, actually. I mean, it's the natural order of kind of the human way of life. But whoever's in power doesn't want to let go easily. I mean, you don't have a control of something of value and easily let your hands off of it. In fact, you've seen this maybe before in your life. When things get tough, you grip harder on control. So you do more radical things as you feel you might be losing control. That's the human nature. It's to grip things to death when you sense that there might be change. Now, a really evolved person realizes that life is change. So you let go and see how that's how you can really see what's really happening. Okay. But when you're in power, you don't do that so easily. You see it all the time. You see it in Belarus right now with Lukashenko. I've been to Belarus, by the way. It's a fascinating place. This guy's like walking around with a machine gun, and well, yeah, he realizes he's under pressure, so you don't let go very easily. And so that's what's happening now. These guys grip tighter. And so what we should expect is more and more radical things to happen, as this system comes under pressure. Now, gold is your safe harbor. Gold is your place where you say, okay, you guys do what you want, because the reality is I'm going to trade this gold back at some point for some fiat currency because I'm going to do something with it. That's how you got to think about gold. It's like it's a parking stall, where your car's not going to get destroyed.
Definitely. And you talk about that in your book, that really there will be a time probably to sell your gold, right? And there are different kind of gauges, different ways to gauge when that time is. You look at, but the fundamental thing that you kind of point at is that you compare it against other assets. So you kind of look at the gold or the Dow gold ratio, the gold silver ratio, and other things like that to really give you a perspective on what really is the value of gold right now.
Well, so I wrote financial newsletters for almost a decade. I mean, I wrote some of the biggest newsletters in the world. You've heard of all of them. I won't go into the names, but you've heard of all of them. So if anybody listening subscribes to a newsletter, chances are at some point I wrote it. And what I noticed is we have analytics, and we can see that people don't read the newsletter. So I would write them this like 15-page, 20-page newsletter. I would spend a lot of time doing it, and then they would flip to the bottom to see the stock recommendation. And so I would always tell these people, listen, I'm trying to help you see how I think. I didn't get the stock recommendation from a psychic. I mean, I'm telling you that I got 15 pages of this is what I see happening, and this is how we're going to benefit from it. So there's value in the book. I say to people when to sell. That's the last section, when to sell. Okay. So what I'm telling you, everybody wants me to say, this is the price where you sell. You just put the order in at night and boom, it's done in the morning when you get up. Forget about that. what I'm trying to tell you is there is a time to sell. And I can promise you, like, I'll do a really good job of selling because I do very good with this type of thing. But I'm walking people through exactly what I do. I'm giving you the secret sauce. It's right there in the book. I'm telling you exactly what I'll be looking at. Because everything has value relative to something else. Like you say, gold is 1950 or Bitcoin is 12,000. Okay, but you're using it in comparison to dollars. So you're comparing. So all value is relative to other things. Like if you, in the quote in the beginning of the book, if you're blind when you're born, you don't know what darkness is because you've never seen light. So I mean, it's like everything is relative. And so I'm trying to explain to people exactly what I do. Now, I don't expect them to, most people just glaze right over. They want the answer, and then, which the answers are in there. So I mean, they're going to get it. But as you noticed, because you think this way as well. I mean, I spent time to say this is what I do. This is the stuff I'm watching. Now, all those indicators right now say that gold is cheap and that silver is really cheap. I mean, that's the thing I think that's too much for people to grasp. I mean, the book's not about silver, but for you and your listeners, I mean, silver is really cheap. You've seen this move right now, okay, we like in July and August, but that's just a warm up. I mean, on a percentage basis, the people that really have skill in this business, are heavily involved in the silver trade. I mean, I think silver does some radical things in the short run.
Now, when we look at the silver market, I mean, we just saw in March the historic high of the gold silver ratio, 126-1. We've never seen that ever in history. And now we're around, 73, 72-1. It's still pretty high. If you look at the historic average of about 12 or 15-1, if you look at in your book, you point out the 20-year average about 65-1, it's still higher than normal.
It's much higher than normal. And the economics for silver are very strange. I mean, they're very different. Most of the silver comes from byproduct, and silver is a huge component of the solar industry, which, by the way, I mean, solar power. I mean, I feel like people kind of have missed this, but the cost per kilowatt hour of solar power is so cheap that, I mean, you have to. I mean, it's free. I mean, it's basically free. I mean, I remember 10 years ago, it didn't make a whole lot of sense. I mean, you needed like heavy subsidies and all the stuff. Forget about that. I mean, you're talking like, cents or fractions of cents, and silver's a big component there. And, there's all this stuff going on, the demand pieces, and there's not any like pure play silver companies to speak of. I mean, of course there's big silver companies, but I mean, they're mining other metals and silver's a byproduct. And, look, I feel like in March when I talked to my friends that own bullion, dealers, okay, and they were telling me that silver was 12, and I was telling them, listen, man, I'm with Metalla, like I'm tuned in to the mining industry. You cannot make money at $12. I mean, maybe there's like one or two places where you can, okay, but like generally speaking, you can forget about it. I mean, these guys, there's going to be zero production because, I mean, it's not going to happen. And they were saying, well, that's interesting because if you wanted me to get you coins, it's $9 or $10 over the spot price. I mean, silver is like 12 and the coin will cost 20, 21, whatever the price was. And you got to wait 6 weeks for it. Well, that doesn't make any sense. And so that's what you're seeing now is you're 25, $26. And, still you have these big premiums. And I mean, silver's going to walk right up to like this year, you can look at it and you can say, I would not be surprised to see $40, and then next year you're right up to $50. I mean, from what happens from there, we need to wait and see what it looks like. Right. But the 2011 top of 50, it's definitely going to take that out. It's definitely going to take that out. And then there's a lot of ways to trade that. I mean, like, if you're less sophisticated, you can buy some 1,000-ounce bars and use them as doorstops or something. But I mean, there's derivative trades. I mean, I'm personally in a pretty major, trade right now. And I put that on in April and May. And then I just added to it this month. That's what I do is I add to the trades that are working. Everybody's afraid to buy a stock that's going higher. Okay, so like everybody wants to buy this stock. Yeah, but it is, momentum goes until it runs into something it can't defeat. So if the stock goes from 10, 9, 8, 7, 6, 5, I mean, this is going to 1, man. That's all the way down. But when you see this, you want to buy that. I mean, this I don't know if you can see, but that's the chart of Metalla. I'm watching Metalla all the time for the company. I mean, it's my biggest investment at the moment, my biggest public investment. And you see the chart just keeps going up because the company keeps building and buying royalties and doing a really good job of it. There's nothing magical happening here. It's just a CEO that's really good at acquiring royalties and doing it and paying the right price. So, I bought the stock yesterday. I mean, people say, well, yeah, this thing's up 900% since it went public. Yeah, well, it's got a lot of momentum, because they're doing a really good job. Okay, so with silver, my point is that, you've seen this initial move, but that's nothing. I mean, if gold goes to 2,500 by the end of the year, you start looking at a 70, ratio of 70, that puts you into the 30s. Easy. I mean, close to 40. Easy. And that's before the ratio even goes back to the average. This is really interesting. You don't see this. You do not see this, but a few times in your life. You do not see this. I mean, you see it, and you got to make your play, because you're not going to see this every couple of months or something. It's not going to happen. This is a very strange opportunity.
Yeah, and the interesting thing is when we see gold in a bull market, often the ratio will decrease. I mean, that's what we've seen over the last 5 months. That what we saw in 2011, in 1980, and I mean, it doesn't have to decrease even to its historic average of like 12 or 15 to 1 to get huge prices for silver. Like if you had a ratio, for example, of 20 to 1, and even if gold just stayed at 2,000, that's $100 silver. So you can see how just the gains in silver are potentially very, very high.
Yes. And the question becomes, how do you play it? I mean, there's not a lot of silver companies. I mean, I know most of them, and it's, I mean, you get a dozen or so, but I mean, it's not that many. There's a lot more gold companies, and so you get silver companies. I mean, but I think now you're at a place where you can play it, in the derivative market if you can control that risk. I mean, imagine silver from 26 to 50, and then from 50 to 100. I mean, it's really possible. It's really, and I'm not encouraging people to go and do something about this, but I mean, I've been in this market for a long time. So, I mean, I've watched this stuff for a long time, and I mean, I didn't write a book about gold, in 2012 when it was falling. I mean, there's a reason why I'm doing all this now. I mean, there's a reason why my biggest public investment is Metalla. I mean, I'm on the board of Metalla. Metalla started out, I told the story of Metalla at the Sprott Conference 2016, July, 4 months before the company formed. Everybody in the audience had the chance to buy the stock in the open market. This was not like a deal for insiders. I told him, I said, this company is going to do a reverse takeover of this little shell company. You can buy the stock right now. And I didn't know the prices. I didn't tell them I said, look, I mean, the guys are working everything out. Then we did the deal. I got on the board. My old business partner was the CEO, Brett Heath, and he's the brains of the operation, not me. But I've been able to help, the whole way shepherd the company's growth. I mean, the thing about being on a public board is that your duty is to the shareholders. So you're trying to create a structure that gives the company a path to do what it's supposed to do. Now, if the timing for that business is good, you can have something really magical. And a lot of people make a lot of money along the way. I mean, I get emails all the time. People pay off their mortgage, all these crazy, and then they're upset because the stock keeps going. I said, well, I mean, this is a gold bull market. I mean, you bought 50 royalties when gold was moving from 1,200 to 1,900. If it goes to 2,500, those royalties are worth a lot of money. I mean, like I tell in the book, right, what happened to Franco. I mean, Franco bought a $2 million royalty, gold strike in Nevada from a bankrupt oil and gas company. And, American Barrick discovered, a ginormous deposit, right in the middle of it. And this returned over $1 billion in cash. It's crazy. I mean, it's absolutely crazy. So you got to understand, what that means. That's leverage. It's not leverage borrowing money. It's leverage to the higher gold prices. But the point is that we put Metallo together in just November of 16 for this reason. And it's just even now starting up. I mean, it's just now getting going. I mean, there's going to be a lot of competition in this business. That's what you see. You'll see more smart people get into the business, and then you'll see if things heat up, and then people start buying each other out, and it'll get crazy, and then people speculate, and then they'll pay way too much for stuff, thinking I'm not going to miss out on 3,000 to 6,000, and they start getting kind of a little carried away. But we're a long way from that. I mean, I still know most of the guys running the big gold companies. I mean, it's like we're a long way away from that. This is you haven't missed. Maybe you're in the second inning or something. There's more action coming.
Now, with respect to investing in gold and silver in the sector, you talk about in your book about there's a lot of different ways to do it, right? You can own the physical metal, and that might be kind of the first step. But then there's also, as you're talking about, kind of the more speculative investments like the stocks and all that. I guess, can you run for our viewers kind of through that?
Yeah, well, so part 3 of the book is how to do it. And if you sit down with probably 2 cups of coffee, you can read all of part 3 in one sitting. It's very easy. And I explain physical, mining stocks, royalty stocks, everything. Now, mining stocks can be tremendous. I mean, you can have stocks that go up, 5,000%, because they stick a hole in the ground and they find something magical down there. But that doesn't happen that often. And I mean, I'm a professional in this business. I mean, I'm not many people have more contacts than I do in this business. And I don't really invest in mining stocks. I mean, occasionally I'll have a friend that says they're raising money for something, and I'll support him, and that's fine. But I'm happy to have some exposure there. But I'm not really itching for mining stocks because the probabilities in the business are very bad. Now, that being said, in a gold bull market, you can have the opportunity to make some tremendous gains here. So maybe it's worth something. But, we start with physical. I mean, if you've never seen, touched, owned an ounce of gold, you probably need to buy an ounce of gold. How do you do it? Well, you don't buy crazy collectible coins, because you don't know what you're doing. All right. So I go through, what are the coins to buy? There's 3 coins to buy. There's 3 coins to choose from that are very safe. And I explain how to know what you should pay for those. And then I give the phone number of a couple of dealers. I mean, of course, you're with Miles these days. Miles is totally acceptable dealer. Call them up. This is what I want. I want 1 coin. Send it to me. Put it in your hand and say, what's this about? My sister always did this. She's like, I don't understand this gold. And she got the coin. She goes, now I get it. And so, anyway, so you can own the coins. You can own the ETFs. We walked through this. Some ETFs have gold. Some ETFs have just futures. So they just have paper. And so we kind of give people that you can buy the real gold on the exchange for the same price as the paper. So I mean, why not have the real gold? Okay, so we go through that, and then we do the mining stocks, and then we do the exploration companies, then we do royalties. Now, I don't know, 99% or something of my investment in the sector is in royalties because royalties don't run into the same problems the exploration companies do. They don't really run out of money and have to drill holes and turn the mountain into Swiss cheese and then figure out they didn't find anything. That's not what a royalty company does, And so a royalty company, is a perpetual, non-dilutable economic carried interest in the property, and the royalty company doesn't have to keep paying for things to happen. So I like the royalty business. It's the closest thing to being a tax collector that I've ever seen in my life. So I kind of start there and then go through that. I mean, and then you got the question of how much to own. I mean, people go crazy, right? They say, well, now I got to put every single penny I have in gold. I mean, you're totally insane if you do that. That's ridiculous. I mean, most people have a financial advisor. Go to the financial advisor and say, I'd like to, buy some gold. And they'll tell you, don't do that. That's a terrible idea. And then, but you could just say, well, what's the harm, in having, 1, 2, 3, some like nominal percentage in gold? I mean, what's the harm? You can always sell it. I mean, you can always sell gold. I mean, if there's a mushroom cloud on the horizon, somebody will buy your gold. I mean, it's not like you don't need the stock exchange to function, you don't need anything. I mean, you can put an ounce of gold in your pocket, and fly to Kinshasa, get off the plane, and you trade that gold for something. That's pretty interesting. You don't need other things to function, to see value there. So what's the harm? I mean, if you decide in a year that you don't like that gold coin, you just go sell it, And so anyway, so the gold coins are one way to do it, but I think the royalty company is the best way to. And Metalla, the ticker for Metalla is MTA. It trades in the New York Stock Exchange now. It has all year this year. So Metalla started out as a Vancouver listed company, and then it's migrated. You see the chart up. I mean, it's to the New York Stock Exchange now, and it's very easy to buy. In any brokerage. And I mean, what I would do is go to the royalty company websites and figure out how royalties work. I mean, I tell you in the book how they work. You save you a lot of time to read the book. But I mean, if you really are the kind of person, probably like you are, where you want to learn about stuff. I mean, learn about the royalty business. That's to me, it's the most lucrative business in the world. And I think as other businesses in the regular economy struggle, people are going to look at the royalty business and say, what's going on here? I mean, you got like other companies beating each other's brains out for, 1%. Then you got the royalty business where you put $100 on gold and you add a multiple of that to the value of the royalty stock. It's crazy. And the costs don't go up. I mean, Franco-Nevada is $1 billion in market cap per employee. There's nobody else close. Like, you could forget about it. Facebook, Google, forget about it. Forget about it. There's no other company that I've ever found. Maybe there's some insurance company in Zurich that has 3 employees or something. But, the royalty company can do more with less people than any other business that I know of. Think about that. I mean, everybody's talking about automation. It's nonsense. I mean, royalties. And this isn't going to happen but once, by the way. This boom is only going to happen one time. It's not going to be a gold boom, a surge in the value of the royalty stocks, and then another one in case you missed it. It's not going to be like that. You're just going to have one life-changing boom, and that's it. That's all. That's what you're going to have. I mean, it's going to be. So how do you position? And that's why I wrote the book. I mean, I wanted my neighbor, a retired teacher or someone like this to be able to read the book. The book is not for somebody that's a specialist in the Roman Empire or something. I mean, the book is for somebody that you go to work every day, you make money, so that you're in the money game, like it or not. I mean, I don't care what if you go to work somewhere and you're trying to take care of yourself and advance, you're in the money game. So you better take the time to understand what's happening in that game. And so the book is for the average person that doesn't even understand maybe all the things that we're talking about, to be able to, when they're done with that book, to say, okay, now at least I get it. I understand what's happening now.
Definitely. Well, E.B. Tucker, thank you so much for joining us today. And if they'd like to, learn more, maybe get your book, where can they find you?
Yeah, so you can get the book at Amazon in soft cover. They'll ship it to you Prime. You can get it in Kindle right away. You can get it on Audible. You have me reading it to you, which is also a nice way to get the book. And you can also check out Metalla's website, metallaroyalty.com, and the ticker symbol MTA. And so, I hope you and I last time we were together, we covered some of these things, and the silver price is a lot higher. Metalla is significantly higher. I mean, I hope people that listened last time took this to heart, right? Because if they did, I mean, they had a tremendous, potentially life-changing increase in the value of Metalla stock. But I think people should maybe go back and listen to that and say, maybe we should consider these things.
Definitely. Well, E.B. Tucker, thank you once again for joining us today.
Thanks.